So, good morning, students. I am discussing in income tax the first chapter, profits and gains of business and profession. The profit or gains from business or profession carried on by the assessee at any time during the previous year are assessed to tax under the head income from business or profession. ಯಾವುದಾದ್ರೂ ಪ್ರಾಫಿಟ್ ಇರಲಿ, ಗೇಯ್ನ್ ಬಂದಿರಲಿ, ಬಿಸ್ನೆಸ್ನಲ್ಲಾದರೂ ಬಂದಿರಲಿ, ಪ್ರೊಫೆಷ್ನಲ್ಲಾದರೂ ಬಂದಿರಲಿ, ಆ ಪ್ರೀವಿಯಸ್ ಇಯರಲ್ಲಿದ್ದರೆ ಅದನ್ನು ನಾವು ಟ್ಯಾಕ್ಸ್ಡ್ ಮಾಡೇ ಮಾಡ್ತೀವಿ. So before knowing the tax provisions of section 28 to 44, it is important to understand the meaning of the business, profession and vocation, and even the format for computing taxable income from business or profession. What is business? According to section 2 subsection 13 of the Income Tax Act, the term business means any trade, commerce or manufacture or any adventure or concern in the nature of trade, commerce or manufacture. What is profession? According to section 2 subsection 36, profession refers to an occupation where intellectual skill and technical expertise in a specified field is acquired for earning a livelihood. For example, lawyer, doctor, auditor. Even further, vocation includes in a profession. What is vocation? Vocation means an activity upon which a person spends the major portion of his time to acquire skills and out of which he makes his living. For example, music, dancing, writing books, etc. What is the format for computation of taxable income from business? First, we take net profit or loss as per profit and loss account is the base. Then we added 5 items. First one is inadmissible expenses debited to P&L account, even business incomes not credited to P&L account, overvaluation of opening stock, undervaluation of closing stock, and notional loss. These are the items are added. And items are listed. One is admissible expenses not debited to P&L account, even tax-free incomes credited to P&L account, non-business income credited to P&L account, and undervaluation of opening stock, overvaluation of closing stock, even notional profit. So what is notional profit? No person can make profit by trading with himself in another capacity. For example, if the amount of sales which is credited to P&L account includes a sum of rupees 20,000 representing the value of goods withdrawn for the use of assessee's family's member, and if these goods were purchased at a cost of rupees 10,000, there is a notional profit to the extent of rupees 10,000, that is 20,000 minus 10,000, and this profit is called a notional profit, and it should be deducted from net profit as tax is levied on real profits but not on notional profits. On the other hand, if there is any notional loss, it should be added back to the net profit. Suppose in any question paper, instead of net profit, net loss is given, the above rules shall be reversed. Items to be added shall be deducted, and deducted items shall be added. So, what is inadmissible expenses? Inadmissible expenses are those expenses which are not allowed under the Act. If such expenses are debited to P&L account by the assessee, they should be added back to the net profit. Following are some of the examples of inadmissible expenses. What are those? Family planning expenses, fines and penalties, fringe benefit tax, interest on capital, illegal expenses, legal expenses to acquire a title or cure a defect in the assessee's title of assets, loss from discontinued business, gifts and presents non-publicity, even GST, customs duty, local taxes of the premises used for business not paid on or before the due date, any business expenses paid in cash exceeding rupees 10,000, 100% of such payment shall be disallowed. Even the monetary limit of rupees 10,000 has been raised to rupees 35,000 in case of payment made for plying, hiring or leasing goods carriages. Even salary or interest on loan payable outside India without TDS. Even speculation loss, bad debt still recoverable, betterment charges paid to corporation under Town Planning Act, even employer's contribution to Provident Fund not paid on or before the due date of filing returns, expenses relating to other heads of income like municipal tax of HP let out, even excess depreciation also, expenses incurred to earn tax-free incomes like cultivation expenses, excessive and unreasonable payment related to business made to the relatives, even direct tax like income tax, advance tax, interest on loan taken for the payment of income tax, even differences in trial balance, capital losses like loss on sale of machinery, loss on sale of car, even charities and donation, capital expenditure like purchase of machinery, extension of building, cost of permanent signboard fixed in the office premises, contribution to staff welfare fund, unapproved or unrecognized fund contribution, patents, copyrights, technical know-how purchased, assessee can claim depreciation under section 32 at 25% for the patents, copyrights, technical know-how purchased during the previous year. Even personal expenses or losses like life, medical insurance premium paid on one life or any member of assessee's families, amount invested in NSS, NSC, PPF, proprietor salary, proprietor bonus, drawings, theft from residence, rent paid for self, casual help, household expenses, expenses for arranging personal party, etc. Preliminary expenses. Preliminary expenses expenses relating to the preparation of feasibility report, project report, conducting market survey, or any other survey relating to assessee business are 5% of the cost of the project. Whichever is less is deductible in equal installments over the period of 5 years commencing from the previous year in which such expenses were incurred. Provisions and reserves like reserve for future losses, provision for bad and doubtful debts, these are the 30 items are inadmissible expenses. Next, examples of business income. If business income are not credited to P&L account, such incomes should be added to net profit to get income taxable under the head income from business. Following are some of the examples of business income. The first one is rent received from employees, interest from debtors for delayed payments, profit on sale of import license, sales, commission, sundry receipts, discount received, even speculation incomes also. Cash assistance received by the assessee against exports under any scheme of Government of India or export incentives, customs, excise duty recovered but earlier allowed as deduction, amount of liability foregone by the creditor, even bad debts recovered but allowed earlier. These are the business income. Next, admissible expenses, allowable expenses. Admissible expenses are those expenses which are allowed under the Act. If such expenses are not debited to P&L account by the assessee, it should be deducted from the net profit. Following are some of the examples of admissible expenses. Advertisement expenses. Even advertisement given in magazines or somewhere of a political party is inadmissible. Audit fees, bank commission, bad debts, bank cash transaction tax, contribution towards rural development program and conservation of natural resources, cost of kacha well, bore well, but cost of kacha well is inadmissible. Commodity transaction tax, demurrage paid to railways, even discount allowances as per IT tax, depreciation liable, establishment expenses, even expenditure on guest house or holiday home facility, electricity bill, land revenue, repairs, fire insurance premium, rent of the premises which is used for business, entertainment expenses, even expenditure on campaign against nationalization, expenditure on scientific research. The first one is revenue expenditure on research carried on by the assessee is fully deductible if such research relates to the assessee business. Capital expenditure on research carried on by the assessee is fully deductible if such research relates to assessee business. Deduction is available even if the asset is not put into use for research by the assessees during the previous year. Contribution to an approved university, college, or other institution for the purpose of research in social science or statistical research is deductible at the rate of 100% of such contribution. Contribution to national laboratory is deductible at the rate of 100% of actual contribution. Even contribution to approved research association, approved university, college, or other institution is deductible at the rate of 100% of actual contribution. Contribution to a company to be used by such company in scientific research under section 35 1 2 2a deduction of 100% is available. So, under alternative tax regime, deduction for scientific research under 35 is blocked. Even next, festival expenses, general expenses, gifts and presents not made in personal capacity, income tax expenses, loss of stock due to theft by an employee, legal expenses for filing income tax appeal, legal expenses to defend an existing title to a capital asset, municipal taxes of quarters let out to employees and other expenses incurred according to the provisions of law, postage and telegrams, printing and stationery, professional tax paid, railway freight and octroi expenses, service charges, subscription to trade or professional association, salaries, wages, perquisites, allowances to employees, staff welfare expenses, security transaction tax, tournament expenses, telephone installation charges under OIT schemes, traveling expenses related to business, training expenses, welfare expenses. Next, tax free incomes. If incomes which are exempted from tax are credited to P&L account, such incomes should be deducted from net profit to get income taxable under the head income from business. Following are some of the examples of tax-free incomes: Dharmada, Mandir, Goshala receipts, refund from LIC, even withdrawal from PPF, interest from post office savings bank account, even income tax refund, gift from father relatives, customs duty, excise duty recovered but disallowed earlier, agricultural income, even bad debts recovered but disallowed earlier. Some business incomes not taxable under the head profits and gains of business or professions. What are those? Rental income in the case of dealer in property, dividend on shares in the case of dealer in shares, even winnings from lotteries, even interest received on compensation or enhancement of compensation. Speculative transaction. Speculative transaction is one where profit is earned by fluctuation in prices of securities or commodity. These are the examples of admissible or inadmissible expenses. Sales tax paid during the year admissible, interest on capital inadmissible, donation to political party inadmissible, loss due to theft admissible, life insurance is a personal inadmissible, income tax is also inadmissible, outstanding sales tax of previous year paid during the year 30,000 admissible, interest on loan taken for daughter's marriage inadmissible, penalty paid to customs authority for improving prohibited goods inadmissible, loss of rupees 1,20,000 snatched away from the cashier position while going to bank deposit admissible, brokerage paid for raising a loan admissible, commission of rupees 50,000 paid to secure a business order admissible, and last one, compensation of rupees 2 lakh paid to an employee for premature termination of service admissible. So these are the examples. State with reasons whether the following expenses are admissible or inadmissible. The first one is traveling expenses include a sum of rupees 15,000 incurred by a director for traveling abroad for negotiating the purchase of plant and machinery. 100% it is a capital expenditure, hence disallowed. Amount paid to union leader to call off the strike, it is also disallowed. Even compensation paid to an employee for termination of service, it is allowed. Loss due to embezzlement, it is allowed, admissible. Interest paid for funds borrowed for purchase of building, So it is capitalized. Purchase of land for the purpose of research, it is disallowed. Fees paid to lawyer for drafting the business commencement agreement deed. So for it is a preliminary expenditure. So 1/5 of such expenditure will be allowed for 5 successive previous year. Even purchase of building for the purpose of research. So it is a capital expenditure, it is fully allowed. But in new tax regime, it is blocked, disallowed. Rupees 1,20,000 paid to salary to employees engaged in research 1512, but business commenced 1511. So within 3 years before commencement of business is fully allowed. Even salary of rupees 80,000 paid to an employee engaged in research during the previous year, that is revenue expenditure, it is fully allowed. Even purchase of computer research purpose 60,000 but used for business, so it is it should be treated as business assets. It will be qualify for deduction. So donation to Bangalore University for research in the field of social science, so it is allowed 100%. Provident fund of rupees 50,000 paid by check to the Commissioner of Provident Fund on 18/4/22, but check was encashed 22/5/22. Due date was 24/22. So, but encashed within 15 days from the due date is to be disallowed. Mr. X purchased goods worth rupees 50,000 from relative, and the market value of these goods was rupees 20,000. The payment of rupees 50,000 was made through a bearer check. The difference between purchase price and market value of the goods, that is 50,000 minus 20,000, is equal to 30,000, to be disallowed. On the other hand, the remaining amount 30,000 paid through a bearer check to be disallowed. The amount of payment exceed rupees 20,000. Even payment of VAT in cash to state government, that is allowed. Payment freight charges 30,000 to railway, it is also allowed. Due to bank strike, X paid 60,000 to supplier in cash, it is also allowed. Next, depreciation is very important. What is depreciation? So depreciation refers to a gradual, permanent, continuous fall in the book value of the fixed assets due to constant use of the asset. Depreciation can be claimed as an expenditure only if the following conditions are satisfied. Assets should be owned by the assessee. Assets should be used for business or profession. Assets should be used in the previous year. Only which method we are followed? WDV, written down value method of depreciation, is allowed for the computation of business or professional income. This is the format. WDV of the block of assets at the beginning of the years we considered. Add any purchase of assets during the year, less any sale of assets during the year. Then we get total depreciable value of the block of assets and deduct depreciation at prescribed rate. Then finally we get WDV of the block of the assets at the end of the previous year. So note, block of assets means a group of assets falling within a class of assets in respect of which the same percentage of depreciation is prescribed. Any assets including new plant and machinery acquired during the previous year but put into use for less than 180 days during the previous year, then only half of the depreciation will be allowed at the prescribed rate. If an asset is acquired during the financial year financial year preceding the previous year, but used for less than 180 days, aforesaid restriction would not apply. Additional depreciation. The first one is if new plant and machinery is acquired and installed after 31st March 2005, additional depreciation shall be available at 20% of the actual cost of the new plant and machinery. If the new plant and machinery is put to use for less than 180 days in the year which it is acquired, the rate of additional depreciation will be 10%. If new plant and machinery is acquired for setting up enterprise in a notified backward area, the above mentioned state and installed after 1/4/2015, additional depreciation shall be available at 35% of the actual cost of the new plant and machinery. If the plant and machinery is put to use for less than 180 days in the year in which it is acquired, the rate of additional depreciation will be 17.5%. Even under alternative tax, additional depreciation is blocked. So these are the rates of depreciation for assessment year. So building, 4 type of building: residential 5%, non-residential 10%, building acquired for installing 40%, purely temporary erection 40%, furniture 10%, any furniture and fittings 10%, even plant and machinery, general plant and machinery 15, motor car 15, aeroplane 40, motor bus 30, ships 20, plant and machinery 30, air pollution control equipments 40, motor buses, motor lorries 45%, computer 40, books 40%, intangible also 25%, typewriter 15%, surgical equipments, x-ray machine 15%. No depreciation is admissible if the written down value has been reduced to 0, though the block of assets does not cease exist on the last day of the previous year. There are different methods for calculation of depreciation, but Income Tax Act only recognize WDV method.